Good morning, it's Monday the 28th of March and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So let's get straight to it. So let's take a look at the economic numbers being issued this week. Well, nothing's happening today, but on Tuesday we'll get an update on retail sales down in Australia, an update on the German GfK consumer confidence, the Bank of England quarterly report, and the job openings and labour turnover survey over in the US. On Wednesday, we'll hear the latest EU consumer confidence figures, German CPIs, US ADP employment report, and an update on GDP growth over in the US, and we'll talk about that in more detail in a moment. Thursday brings us our latest GDP figures over here in the UK. An update on German retail sales, a meeting over at OPEC, the US jobless claims, and as inflation has become the global hot potato, we'll see how it's faring over in the US as we hear the latest personal consumption expenditures index. That's something we'll take a look at in more detail shortly. And finally on Friday, the global manufacturing PMIs. And it's the turn of the Eurozone to reveal their latest inflation figures. And we'll discuss these as well in a moment, as well as the latest US non-farm payrolls. And the companies that we'll hear updates from this week are as follows. On Monday, Pershing Square. And on Tuesday, UK housebuilder Bellway, who will be reporting first half year results. We'll take a look at these straight after this. And Chewy over in the US, and also in the US, computer memory and storage manufacturers Micron Technologies report their Q2 earnings, and we'll take a look at how the global supply chain has impacted Micron after this. On Wednesday, AG Bar. Thursday, over in the US, Walgreens Boots, and finally on Friday, Penham. So, with Joe Biden stating publicly in a speech in Poland that Putin can't remain in power over the weekend, the Russian war will of course remain the point of focus as the new week kicks off. Peace talks still lack tangible progress, keeping the market sceptical of a diplomatic solution to the Ukraine crisis being reached anytime soon. Commodity prices, particularly oil prices, will remain inextricably linked, of course, to the war, keeping costs elevated and ahead of the OPEC Plus meeting on Thursday. These rising oil prices are keeping inflation fears front and central for the market. No surprise. Last week, the Fed upped its hawkish stance. This week, the inflation report could carry more weight than the non-farm payroll report. So with that in mind, let's take a look at this week's key stories. Bellway is due to report half one results on Tuesday. Now, while the housing market has continued to boom across the past year, the same cannot be said of the housebuilders' share price, which fell to a 16-month low at the start of the month. Preliminary figures showed record first-half completions of 5,694. That's up 1% on the previous year, and expectations are for a 3% increase in selling prices to £311,800 across the same period. Cost inflation in the sector is around 5 to 6%, which has been offset by the house price increase. Operating margins of about 18% are forecast for the year. However, there's still a big unknown about the costs associated with safety remediation work as part of the cladding tax. Also on Tuesday, Micron Technologies are due to report Q2 earnings. Expectations are for a rise of 21% to $7.55 billion, and that's up from $6.23 billion delivered the year before. Earnings per share expected to more than double from 98 cents to $1.98. Micron has said that supply chain risks do remain, although an improvement was expected. This was, of course, before Russia invaded Ukraine and China saw its most recent virus outbreak, which is now expected to pose more of a threat to supply chains yet once more. The share price trades down 20% from the start of the year. Wednesday brings us an update on GDP in the US. Well, the latest reading of US GDP for the fourth quarter revealed that growth rebounded firmly by 7%, upwardly revised from 6.9%, and after a disappointing third quarter. A robust recovery in both manufacturing and service sector activity lifted growth in the final 3 months of the year, and thanks to substantial boost in the labour markets despite the Omicron hit at the very end of the year. Investors will be looking for a final upward revision to the reading, even though personal consumption weakened slightly. So as a result, do keep an eye on the US dollar and US indices. Thursday sees the release of the latest personal consumption expenditure figures in the US. Well, last week, Federal Reserve speakers have been sounding increasingly hawkish. As expected, the Fed hiked rates for the first time in the March meeting. The Fed also set out for a further 6 rate hikes of 0.25% across the year. Since then, the Fed has been upping the hawkish rhetoric, with the market now pricing in a 70% probability of a half of a percent hike to tame out of control inflation. The core PCE index is the Fed's preferred inflation gauge. The data shows that core PCE inflation rose by 5.5% year on year in February. That's up from 4.9%, and the PCE index is expected to rise to 6.4%, and that's up from 6.1%. High inflation could cement a 50 basis point rate hike by the Fed in the next meeting in May. Consequently, do keep an eye on the US dollar and US indices. And sticking with inflation, which as it happens is proving to be rather sticky, we'll get an update on CPI in the Eurozone on Friday. As measured by consumer prices, February's inflation rose to 5.8% year on year, a record high, jumping from 5.1% in January. Rising fuel, food and energy costs drove inflation higher. Core CPI, which removes the more volatile food and fuel items, jumped to a record high of 2.7% from 2.3%. However, producer prices, PPI, which measures inflation at the wholesale level, continues to climb, topping 25% year on year in Germany. PPI is considered a lead indicator, suggesting that inflation is still likely to rise. Combine higher PPI with the fallout from the Ukraine war, and inflation expectations are rising. The ECB adopted a more hawkish stance in the latest ECB meeting and is increasingly likely to hike interest rates in Q3 of this year. So as a result, do keep an eye on the euro and the DAX. And also on Friday, we'll hear the latest US non-farm payrolls. The February jobs report showed that 678,000 new jobs were added, smashing forecasts of 400,000, and January's headline figure was revised higher. The figures suggest that the US jobs market is tight, particularly given that there are still some 11 million unfilled vacancies. The strength of the labour market, without doubt, plays a role in the more hawkish stance that the Fed is adopting. Unemployment fell to 3.8% and hourly wages were slightly softer at 5.1%, down from 5.5% in January. With inflation at 7.9%, wages aren't keeping pace, which means that household incomes are being squeezed. This month, 450,000 jobs are expected to have been added, and the unemployment rate is expected to keep falling. Wages are set to rise back up to 5.5%. So do keep an eye on the US dollar and US indices. So those were the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from Smith & Nephew, Intercontinental Hotels, Taylor Wimpey, Phoenix Group Holdings. And in the FTSE 250, it's the turn of MoneySupermarket.com, Travis Perkins, Hammerson, Fidelity Growth and Income Trust, Games Workshop, and Primary Health Properties. So there you have the highlights coming up this week. As always, thanks for watching, and don't forget to click on that subscribe button to make sure you don't miss out on any of our regular videos. Also, as always, just a little reminder that if you haven't already downloaded our app, why not give it a try to make sure that you receive all the latest up-to-date financial news and, of course, our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.